Hey everyone, welcome back to Corporate Decoder, the place where we try to turn these dense SEC filings into understandable insights, and boy do we have one for you today. We're diving deep into Nuveen, California AMT-FREE Quality Municipal Income Fund's latest report. Get ready because we have some juicy numbers and some important points to unpack about their recent performance and future outlook. And hey, before we jump in, if you like getting the real scoop on companies without all the corporate jargon, make sure you subscribe and join our Discord community, linked in the description below. So what is the big picture here? Nuveen, California AMT-FREE Quality Municipal Income Fund is essentially offering up more of its common shares. You know, like a company wanting to sell more stock to raise more money. They are looking to sell 7148000 shares, and the prospectus, that is the document telling investors all about this offering, is dated the 16th of January 2026. Now let's look at what the market is saying very recently on the 12th of January 2026. The closing price for these shares was $12.98. But here is where it gets interesting on that same day. The net asset value, or NAV, per S-share was $12.21. This is a small but significant difference, and that difference translates to a premium of 6.31%. So basically the market was willing to pay a bit more for these shares than their underlying value at that moment. As of that date, the 12th of January 2026, the fund had about 52,507,894 common shares out there, and the total net assets applicable to these common shares was a hefty $641,183,022. Now, if they sell all these shares at that 12.98 price guess, how much they're expecting to rake in? Around $91,823,230 after accounting for fees and expenses. That is a good chunk of change. So what is the money for? It is going right back into the fund's main goal to invest in tax-exempt municipal securities. They want to provide income that usually doesn't get taxed by the federal government or California state. Plus, they're aiming to grow the value of the portfolio. They think they can do this by finding undervalued municipal bonds or market sectors. Let's talk about expenses. For every $100 you invest in their annual expenses, you're looking at about $3.77 going towards management fees, interest, and other costs. The management fee itself is about 0.99%, but a big chunk of that is interest and other related expenses at 2.68%. This tells us they use leverage, which is like borrowing money to invest more. It amplifies both potential gains and potential losses. How will these shares actually get sold? They have a distribution agreement with Nuveen Securities LLC and Stifel Nicolaus and Company, incorporated as acting as a sub-placement agent. The price will generally not be less than the net asset value plus a commission. They can change this commission rate, and they have a lot of discretion on how many shares to sell on any given day. Nuveen Securities, the distributor, is going to get a variable commission rate. It is a bit complicated, but basically it is a percentage of the premium over the net asset value. Out of this, Nuveen Securities will pay the dealer Stifel Nicolaus. And what about risks? They are upfront about it closed, and companies like this fund often trade at a discount to their net asset value. This means you could buy shares and then later sell them for less than you paid, even if the fund's underlying investments are doing well. It is a key risk for investors. Let's check out their trading and NAV history leading up to November 2025. The high market price was $12.99 and the low was $11.80. On the NAV side for that same period, the high was $12.26 and the low was $11.52. This resulted in a high premium of 5.95% to NAV at one point and a low premium of 2.43% at another. This shows the market price can bounce around quite a bit relative to the fund's actual asset value. Going back to the 12th of January 2026, we saw that 6.31% premium again, based on those figures of 12.98 market price and 12.21 NAV. In the main prospectus document dated the 6th of January 2026, they had 52,270,994 common shares outstanding, and net assets applicable to common shares were $636,764,001. And on the 6th of January 2026, the closing price was $12.52. While the NAV was $12.18, giving a premium of 2.79% on that particular day. So what are they doing to manage the fund and its investments? Nuveen Fund Advisors LLC is the main investment advisor, and Nuveen Asset Management LLC serves as the sub-advisor. They're responsible for the day-to-day investment strategy and operations. The management fees are tiered based on average daily managed assets. For the first $125 million, it is 0.45%, and it goes down as the assets grow. There is also a complex level fee that starts at 0.1600%. This means the total management fee can be quite substantial. For example, as of December 2025, the complex level fee rate was 0.1560%. Now let's look at the financial highlights table for the year ended the 31st of August 2025. They had a net investment income of $0.50 per S-share. However, they also had a net realized and unrealized gain or loss of negative $1.28 per S-share. That is a pretty big drop in asset value. All this resulted in an ending NAV of $11.56 per S-share for that year, and the ending share price was $11.82. Looking back at the summary of fund expenses, we see that their total annual expenses are 3.77% of net assets. This includes that management fee and other costs. They have some strict rules they have to follow. For example, they cannot borrow money in a way that would exceed 1/3 of their total assets. They also limit investments in any one industry to 25% of their assets. The fund primarily invests in municipal securities. These are bonds and notes issued by state and local governments to fund public projects like roads and schools. They aim for interest that is exempt from federal and California income taxes. They also mention inverse floating rate securities. These are a bit complex, but generally they are leveraged investments whose interest rates move in the opposite direction of short-term tax exempt rates. This type of investment can be more volatile but potentially offer higher yields. For the year ended the 31st of August 2025, their portfolio turnover rate was 19%. This means they bought and sold about 19% of their holdings. A higher turnover can mean more trading costs, which eat into returns. The fund is managed by a board of trustees. They have 12 trustees, all of whom are independent, meaning they don't have financial ties to Nuveen. The board is divided into 3 classes with staggered terms, which helps ensure continuity. Each of these trustees oversees a significant number of portfolios within the Nuveen fund complex, around 219 portfolios each. This shows the scale of their operations. Independent trustees receive compensation for their work. For the fiscal year ended the 31st of August 2025, the aggregate compensation from the fund for the independent trustees was in the thousands of dollars, but the total compensation across the entire fund complex for the calendar year ended December 2025 was much higher, ranging from around $487,000 to over $636,000 per trustee. Finally, let's touch on proxy voting. Nuveen has a policy to vote proxies from companies they invest in based on what they believe is best for long-term shareholder value. They have a dedicated stewardship group to manage this process. Now, for my take, Nuveen California AMT-FREE Quality Municipal Income Fund is navigating a space that is all about providing tax-advantaged income. The fact that they're offering more shares shows confidence in their ability to deploy that capital effectively. The premium to NAV on their shares is something to watch. While it can sometimes signal strong investor demand, it also means investors are paying more than the underlying value, which carries its own risk. Their expenses are a bit high, especially the interest and other related expenses, which point to a significant reliance on leverage. Leverage can be a double-edged sword, amplifying returns, but also increasing risk, as we saw with that negative unrealized gain. The fact that they have such a detailed risk factor section and investment restrictions shows they are aware of the challenges. The investment in municipal securities is solid, especially given the tax benefits, but market conditions and interest rate changes are always key factors. The trustee structure with independent directors and committee oversight seems robust. Overall, this fund aims to deliver consistent tax-efficient income and growth. The strategy is sound, but the reliance on leverage and the market's pricing of its shares relative to NAV are definite points of attention for any potential investor. They need to continue managing those leverage costs and hopefully maintain that premium, or at least avoid significant discounts in the future. The key takeaway is that while tax-exempt income is attractive, investors need to be aware of the leverage risks and the premiums they might pay for shares. That is our deep dive into this Nuveen filing. What do you think about their strategy and the numbers we uncovered? Let me know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more corporate decoding. And remember to join our Discord community linked in the description for ongoing discussions and insights. Thanks for watching, and we'll see you in the next one.